Hello and welcome into the KE Report. Shad and Corey here as your host, and we're talking today and getting an update with Ryan King, Senior Vice President of Corporate Development and Investor Relations at Calibre Mining. Calibre Mining is traded on the TSX under the ticker CXB and on the OTCQX under the ticker CXBMF. And for those of you following along, you know we've had a lot of coverage on the show talking about the big news, the merger between Calibre Mining and Equinox Gold. Now, this is a big deal in the sector. It's two mid-tier producers coming together to really form a major producer. Both companies have quality assets across multiple jurisdictions, and both companies are building or have built giant mines here. Greenstone having been completed the end of last year for Equinox, and Valentine Gold Mine in Newfoundland nearing completion with a anticipated end of Q2 start date for mining. Now, these are massive projects that are going to bring the cost down for both companies, Ryan, and yet these companies are coming together into a mega company here, forming a new major. Talk to us about the rationale behind combining forces of Calibre and Equinox.
Hey, Shad, hey, Corey, thanks very much for having us on the show. It's always a pleasure. Yeah, no, thanks very much. It's a very busy time. It's an exciting time. It's a time where obviously there's a lot of questions and comments that are coming in, as M&A attracts a lot of those questions and comments, no doubt. And it's an exciting time, as we see gold hitting record highs. And as you just said, Shad, Calibre is on track for bringing in the Valentine Gold Mine for first gold in Q2. Equinox had first gold at Greenstone and then declared commercial production last year at Greenstone and is continuing to ramp up that asset in Canada. So, when we step back and look at the opportunity here, there's a company here on a pro forma basis that will produce, this year, I think midpoint of guidance is between the two companies' guidance is about 950,000 ounces, and that doesn't include anything from Valentine or, I believe, the Los Filos asset in Mexico. But there is a clear path where we can see annual gold production to be north of 1 million ounces a year, and as you said, with the Canadian assets being a lion's share of and the cornerstone assets within the portfolio, that will be a very positive thing from a cost per ounce perspective. And again, with the two Canadian assets at nameplate capacity, we're talking about approximately approaching 600,000 ounces a year of annual gold production out of Canada. In a tier one jurisdiction like this, with these low cost, long life assets in front of us, this creates a very compelling opportunity when you come out of the gate and have a pro forma market capitalization of about 5.5 to 6 billion US dollars. When you compare that against other companies that have production profiles in this range or even smaller. I'll use an example. And I know they've got a great track record, but Alamos Gold that has 600 plus thousand ounces of annual gold production, most of which is coming from Canada, and then some of that coming from outside of Canada. And they've got a market capitalization of about 10 billion. So there's a real opportunity here in this size and this niche. Yes, combining the teams and combining the assets, there's a lot of additional growth opportunities within the portfolio. So I think in time, this is going to be a win-win, I believe, for all shareholders. And it kind of draws the conclusion to, as our chairman brought up on the conference call, it draws our conclusion to, Calibre senior management, Darren Hall, our chairman, Blaine Johnson, lead director, Doug Forrester, and myself were also involved in a company called New Market Gold. And that was an analogous situation where we had discovered one of the highest grade underground gold mines in the world at Fosterville. And we were continuing to find high grade gold, and we actively went out and merged the company with Kirkland Lake Gold in an at-market business combination. There was no premiums involved there. And so when we combined those companies, there was a lot of gnashing of teeth. There was a lot of questions. There was a lot of why. The diversification ended up being very positive for that business. And the company, I think, had about a $1.5 billion valuation, went to $10 billion. So it worked out very well for shareholders on the back of that business combination. If the right teams, the right assets can come together, you can unlock a lot of value. And obviously, it's attractive because we're in a fortunate macroeconomic landscape as well, where Gold prices are performing incredibly well. We can't count on that happening at all times, but they're performing incredibly well. So bringing these assets together to combine to be a plus 1 million ounce a year gold producer will very much, at these metal prices, strengthen, obviously, EBITDA growth, as well as, help deleverage the new Equinox Gold. So I think it's a very compelling opportunity. And again, it will take some time to unlock all of the value. And as we know, there's some growth assets in that portfolio as well that will take some time to unlock. But we believe that this is a situation where by bringing these teams and by bringing these assets together, collectively, we can do a better job together than maybe separate.
So, Ryan, it really seems to me like what you're outlining there is that we need more major companies. We need more of these larger producers because, quite frankly, we've seen a consolidation of these major producers in the sector. So that's what I like about this deal of Calibre and Equinox coming together. But there are the comments out there of some of the Calibre shareholders that said that they wanted to see your stock run even further with Valentine coming online this year because you had lower costs. I understand Equinox, their costs are coming down with the Greenstone Mine, but what do you have to say to those shareholders that say, I really wish Calibre stayed an independent company, let the share price run, but they have the question about Valentine. Were there cost overruns at Valentine? Is there an issue there that made this merger, I guess, more attractive to Calibre?
Yeah, so multiple questions in there, I think, Corey. So we'll start with the first question is, probably the question is why now? Why now when you're at the cusp of emerging gold production from Valentine and then ramping that up? Obviously a great question. Now, look, I think everyone is very aware in any business when you're ramping up a new asset, a new plant, a new mine, there's always things that come up. There's always hurdles. There's always uncertainties that weren't foreseen that either cause delays or cost overruns or things like that, and they can happen at any operation, and we've seen it happen, right? We've seen it happen at Greenstone. We've seen it happen at Côté Gold. We've seen it happen, at other assets in the Canadian mining space. There are challenges that come up, and no doubt you have to do everything you can to mitigate those risks, and I think Calibre's done a good job of doing that. But that doesn't mean there won't be those challenges that come up. We don't think there will be. We don't see them. In fact, we're on budget. In fact, we're on schedule. At the end of 2024, Calibre had $100 million Canadian remaining in the initial project capital. So that's not changed from the total 744 million Canadian to complete to first gold. Obviously, there will be more capital that goes into the asset outside of that beyond the first gold. It's the ramp up. You're increasing stockpiles, you're mining, you're slowly commissioning and ramping your mill. So there's a working capital adjustment and capital that goes into all of that, into inventories. But at this point in time, no, we didn't have any issues with Valentine. And it was, it's a lot of work to get there, but it was on track. And yeah, the question has come up, no doubt. If you had waited 3 months, 6 months, 9 months, could you have been in a better position? Could we have? Hindsight's 2020. But could we have? Maybe. And maybe we would have unlocked additional value for Calibre shareholders. That's definitely something that could be. Do we know that for sure? No. But, let's just play that out and say if it did happen. And, Calibre had been performing fairly well. The company had been up. What were we up? Gold price has been up. So that's a tailwind in our business. But gold price was up 27% last year. We're up, year to date, another 10+% on the gold price. So obviously benefiting anyone that's exploring, developing, or producing gold. And so Calibre's equity was up, I think, probably approximately 40% year to date. And there was a lot of opportunities. We had built the confidence by delivering on expectations with regards to not only the Valentine Gold Mine, but also the operations in which we were delivering on. So could there have been additional equity uptick? Sure, potentially. And I think that, as we kind of play that out, looking at bringing businesses together for future sustainable growth and additional upside, I think that is possible as well, but maybe we would have lost that M&A opportunity. When we look at the opportunity with Equinox, we see, a compelling undervalued opportunity. When you bring these lower valuation companies together, maybe there's a way to unlock more upside. I think on a price to NAV basis, both companies are sort of trading around the 0.65 to 0.7 range. I prefer that approach than I do, somebody that's trading at a 1.5 price to NAV coming in and acquiring a 0.7 times NAV, because you're not going to see as much uplift if the company is able to deliver and execute. So that presents to me, and maybe not so much today, but it presents to me a compelling re-rating opportunity, especially with the quality of assets that are in the portfolio.
Well, Ryan, along that same line of thinking, some people have noted the jurisdictional mashup now even being more diverse. Some people have talked about possibly bringing in institutions or funds that wouldn't touch a company that isn't at a certain threshold, like the new combined pro forma company will be. So, a larger company, is it to attract those kind of investors? Is it the bigger production profile, over 1 million ounces a year, moving into the major category that maybe gives you that better multiple? Is it the jurisdiction mashup? Maybe some of the other synergies that you could highlight, please.
Well, I don't think it's growth for growth's sake. I think that we've seen that play out not well. But I think it is combining quality assets and quality teams to be able to deliver on expectations. And I think more than anything else, why do companies in this sector, in any sector, perform better than others? Because they have the trust and the confidence of the marketplace. And Calibre had done a fairly good job of building a track record of trust and confidence. And I think that is the opportunity going forward with this new company. You look at the cornerstone assets in the portfolio that can deliver on these expectations, but also at a nice, very good margin profile, like a very attractive margin profile, and meet or beat expectations. So, this is where I believe, the Alamoses, the Agnicos of the world have built a great track record. They've built a reputation. And I think this is the opportunity for this combined new Equinox to look at, okay, yes, combined, we're a larger producer, but let's look at the portfolio. Let's look at ways to optimize, but also importantly, meet or beat expectations. And that is the big opportunity in front of us. And you look at the characteristics of the companies that have a very positive valuation, and those companies meet or beat expectations. I mean, it's plain and simple. So I think that's the real core competency here, is bringing in these teams of people and the assets, because, at this stage, you're ramping up a major Canadian asset in Greenstone. You're birthing a new Canadian asset in Valentine. The combined teams will have strengths of technical, financial, capital markets, but also operational. I think that's a key point out of all of this. And I think that by having that, key operational experience and expertise coming in, and I think that Calibre does bring that with Darren Hall as the president and COO for new Equinox. I think that presents a very compelling opportunity because, I remember back in 2019 when Calibre acquired assets from B2 Gold. And I don't know, Corey or Shad, I mean, even not a lot of people were paying too much attention to the gold equities, but not a lot of people were paying attention to a Calibre at that point in time. And the reason it was because when we acquired those assets, we were expecting 50, 60,000 ounce a year production profile. We were anticipating potentially closing one of the assets because it had run out of resources on the property. And then, obviously people are going, well, there's not a lot to these assets, obviously a divestiture of a company. So you think about that and where we've come from over the last 4 years, 5 years, and, the implementation of hub and spoke, the expansion of hub and spoke, the delivery, the reputation that we've garnered now. And I think that's an opportunity for this new Equinox Gold to be able to unlock that value, build the trust, build the confidence, and create a very robust, very valuable and successful new business.
So Ryan, to that point, building that value, building that trust, really what you're looking for is the re-rating here to be valued more like your larger producer peers with this merger. is the US listing critical to that Equinox had? And how do you go out there and get that re-rating, or do we simply just wait for the financials and the market takes care of itself?
Yeah, I mean, that's going to get flushed out, I think, in time. But I think partly, Corey, it's delivering on commitments. I think that's going to help build the trust of, hey, we can trust this company to deliver on these commitments. These two Canadian assets that will be the focal point or the cornerstone. New Equinox will be the second largest gold producer in Canada between the two assets once they're at nameplate. So it's delivering on those two assets. There's work to be done at Greenstone. Obviously, there's work to be done at Valentine to be able to get to that nameplate capacity of both assets and deliver on those both assets. So part of it is getting out and educating the market on who new pro forma Equinox will be, right? Part of it will be meeting and beating expectations on a quarterly basis. And that's going to take a bit of time. And 2025, obviously work to do, going through a ramp up of Greenstone, work to be done there, going through a birthing of Valentine. And I think by the second half of the year, you're going to start to see that really start to flush out, assuming everything goes according to plan of the operations. So is the US listing critical? I don't think it's critical, but I think it's a component that can help unlock additional value. Like when I look at a peer group right now, there's companies in this peer group that are trading at a much smaller production profile, much lower EBITDA, very similar balance sheets that are trading at 1 to 1.5 times price to NAV valuations. And everybody, this is consensus basis, and everybody has different NAVs and different details and different gold prices, et cetera. And then I look at the new Equinox, trading at about a 0.67 to 0.7 price to NAV valuation. To me, that presents a pretty compelling opportunity, but it's really going to come down to the delivery of some of these cornerstone assets. It's going to come down to what else could be done in the portfolio from an optimization perspective, right? And you keep in mind, Calibre year over year in Nicaragua has continued to reinvest in exploration because there's surplus capacity at one of the facilities. Right, we've implemented a hub and spoke that's a very responsibly run hub and spoke operation that, if we look at Calibre over the last 4 or 5 years, through M&A and organic growth, we've been able to grow production approximately 20% year over year. And so, there's organic growth within that asset base. There's organic growth when we look at things like Castle Mountain, which is going through its phase 2 permit application for a new CIL plant and an operation there, which, according to what I've read, could be coming by end of 26, 27 timeframe, right? And then there's other opportunities like the Mexican asset Los Filos. It's a very large endowment of gold mineralization. Could there be opportunities there in a bigger company like this? I think there will be. I think there will be ways to unlock the value there. Like Calibre has been able to do year over year. I mean, by blending these family of companies, they will be, looking at structure, we'll be looking at roles and responsibilities and different things that will help align us to be a successful company. And I think it's really, really important here that we focus on what does drive value. That's margin, cash flow, free cash flow generation, and high quality assets in tier 1 jurisdictions. And, when you step back and you look at this, you've got, again, assuming everything goes according to plan and you're at the run rate of both of these assets, say by the end of 2025, you're looking at 600,000 ounces in Canada at a very attractive all-in cost profile, at a very attractive production base with good upside at both assets. We've talked about the Valentine Gold Mine having good exploration upside, as does Greenstone. Greenstone has great exploration upside. There's been good exploration historically across that whole portfolio. It's a large land package. So that's why I think that, by aligning the teams and companies, I think we're going to unlock value. And yes, it will attract larger equity investors because probably it'll come with some additional liquidity, a larger capital markets profile, a lot more attention on the business from an analyst perspective, I'm sure, focusing on those details. But it will bring all of those things. And sure, the US market listing will help from a liquidity perspective. But really, to garner the value, it's going to take some time. It's going to take some building of trust and delivery. We've got to deliver into those expectations in order for that valuation to come. It just doesn't happen overnight.
All right, Ryan. Well, I think we'll wrap it up there. It was well stated, and we'll definitely be watching the pro forma company as it moves ahead with building value, not just operational, but also with the drill bit. I was going to ask you about exploration, but you went ahead and brought it up there, man. One of the things everybody loved about Calibre was how aggressive you guys were with exploration, and there's so much upside at Valentine, and obviously quite a bit at Greenstone, as you point out, an upside on some of the other secondary projects to continue to feed the beast and build more value. So appreciate you spending some time with us to unpack this merger into really the formation of a new major gold producer. And it's an exciting time for both companies. Wishing you guys well. Appreciate you coming on the KE report. And if people want to follow along with the news flow at Calibre, definitely click on the link below this interview. It takes you over to the Calibre website so you can follow along. Ryan, thanks so much for spending some time with us and looking forward to our next conversation.
Well, Chad and Corey, it's always a pleasure. Appreciate the opportunity. And as questions come up, please filter them our way, and happy to discuss with any of your audience in more detail. And again, happy to follow up as we progress. But things are progressing. Information circular is being worked on. Shareholder meetings being set, I believe, sometime by the end of April. And we're all just progressing towards that path of bringing these companies together to be able to unlock additional value for all shareholders. So thank you.